What does it mean when we say we don't want to chase on a play and we want to wait for a pullback? What's going on, Stock Hours fam? It's Christian. So today I want to talk about chasing, what it is, and how you can avoid it in certain scenarios. So chasing is basically when you're getting into a trade that has already had an extended move. So I'll show you some examples on different stocks charts today. But basically, what it is when you're getting in on an extended move with no pullback. So a lot of times you might hear us talk about we want to see a pullback before we get in, and that's due to the fact that we don't want to chase. So basically, when you get a pullback, it allows for more room if it continues moving up. But if it just has a straight fall or a straight push up into your level with no pullback, there's a good chance that it could pull back and then still be a valid setup. But if you're chasing, then you're getting in all the way at the peak high. So your stop loss is going to have to be tight, and you will most likely get stopped out during the pullback when initially you should have waited for the pullback anyway. So, an easy way to avoid chasing on certain setups is having a plan, a pre market plan, or setting a plan before you get into the trade. So, a lot of times when I have my pre market levels set, I know how I want to see them approach. So, I would like to see it reject or bounce and then come back into my level with then good momentum when it comes back. Because if it's one big move into my level, um, the move after my entry typically isn't going to be as big as if it had a pullback right before my entry. So I'll show you some examples. I have Nvidia or Tesla's chart open right now. Um, Basically, some areas where would be a good entry is when you play a low break or something like that. So, for example, like here, or maybe this would be a good one, or here, just for example. The reason for that is because we put in a low, we pull back, and then we come back down. So that's kind of like if you're pulling the string back on a slingshot, it allows for more room. But if you get in after you let go of the slingshot, yes, the string could go farther, but most of the move had already happened. So that's why you want to see these pullbacks and then get in when those lows break, and then there's a much higher chance of it hitting your target after that. But if you get in on a move, let's say let's say 175 for example, because that's the low. You had basically a $5 move with no real pullback. You could say it's a tiny little pullback, but no real move into that. So if you're getting in here, or this would actually be on the first test. So like, let's say you're getting in here with no pullback, your stop loss is gonna have to be pretty tight, knowing that if this works out in your favor, it's most likely not going to break by another $5. Um, so you would most likely get stopped out if you traded something like this. But now, let's say here, for example, on the flip side, if you waited for this pullback, so this would be like an H pattern, something like that. When you wait for the pullback, it has a lot more room to go down, kind of like how I was explaining. So that's kind of something that would look like chasing on a chart, just so you can visualize it. Getting in after a move already happens. So like, let's say you get in here, that's still chasing in my opinion, because the real entry should have been around here at the very most. Wait for that low to break, but I wouldn't want to get in all the way down here. That's in my definition chasing. Um, yeah, there's not really too many like good examples, but like pretty much all of these low breaks are technically could be good entries, but it also depends on more technical analysis. So you wouldn't want to just play every low and every high break. That's not really a good way to trade. But let's go to Nvidia. Um, so same thing with Nvidia. The way I actually traded today, this was the high. Let me actually just draw a line here. Boom. So that's the high right there. And what I wanted to see off open I wanted to see a pullback before that high. So there was two ways I considered trading it. I considered getting in at the high of day or the opening price, which was around here. That would have been a good entry. The reason I didn't is just because it was pretty far from my actual level that I wanted to trade. So I personally waited. Um, and then we ended up pushing up. If you got in here, there's a good chance that you would have probably stopped out on this wick, down here. But since I waited for the pullback, I kind of let this wick happen. This went red to green, and then I got in there on the retest. So this is a smaller time frame of a pullback because obviously it's from 1 minute to the next, but you can still visualize it basically the same way as what I was showing you on Tesla here. So, something like this. Imagine this all happened in 1 minute. That's pretty much what this looked like here. But waiting for the pullback, it basically shows you that your party is still in control. That when the other party, whether it's buyers or sellers, in this case, when sellers came in, they couldn't hold us down, and then buyers bought us right back up with good volume and good momentum. So that's the pullback that I wanted to see. So that was enough for me to get in here, and then I ended up selling at the 690 break. So that's still a $4 move, which is very good. And the reason I was able to hold for so long is because one, the momentum was good, and two, we had a pullback right before this key level high, this pre-market high, which was technically all-time high at the time. So that's why waiting for pullbacks is going to be good because it allows for a bigger move after you enter your position. So one of the most important things basically is to have a plan. And for me, when I saw this break high of day and then start pushing up, I knew in my head I wasn't going to take this trade until it pulled back. I would have been completely fine missing the trade entirely just because it pushing up in a straight move like that personally doesn't fit my system. I like to see pullbacks. It helps me, gauge what the stock is actually trying to do more or better. And it helps me with also setting a stop loss. So on pullbacks, you're able to kind of identify where you want to see the stock hold for the trade to still be a valid setup. So some notes that I wrote: having a pre-market plan based on the levels you want to trade. I kind of went over that. And then with that, it's very important to be disciplined on that plan and respect it, because breaking the plan is, in my opinion, almost worse than taking red trades because you're building bad habits by doing something like that. So for me, my plan was to get in here. This was pre-market before anything happened. So when the market looked like this, my plan was to get in somewhere around here or here, maybe $1 early, something like that. That's what I was looking for. So when the market opened and then we pushed up, had a red, and then we pushed up past this first high of day or opening price or whatever, I considered it here because technically this is the right pullback that I wanted. The reason I waited is because it was just far, but then once we started pushing up, I knew I needed to see a pullback for me to take an entry. So I just didn't want to get in on a straight, this would be a $10 move if it pushed up from basically here to here. So we ended up pulling back, and then obviously once we got back up, then I took it. And then another note I wrote: if you can't plan your stop loss and profit target and find your reasoning for entering the trade, then you should skip it entirely. So that's part of chasing. So let me go back to Tesla because it's going to be easier to kind of tell here. So if you're just seeing, for example, here, okay, Tesla's weak, whatever, so I just want to get in and then catch part of the weakness. If that's your mentality going into the trade, and your mentality isn't, if I enter here and my stop loss is wherever, 181 for example, and then my profit target's 179 or whatever it is, if you're just thinking this is weak, it's going down, I want to get in, then most likely you're chasing and you're not sticking to a good plan, or you didn't even have a plan. So That's why having a plan when you enter trades is going to help prevent you from getting those chase entries and then really having good plans for your trade. So that's pretty much what chasing is and how you can avoid it and why you should avoid it. In the long term, if you're not sticking to plans or if you're not sticking to good plans, then it's probably going to reflect in your account. You might get lucky a couple times, but over the long term, you want to make sure that your entries are precise and that it allows for the best risk to reward in your setups. So that's basically what I look for. Hopefully you guys enjoy this video and kind of, seeing my thought process when I'm getting into trades or planning trades. But if you have any questions, make sure you leave it in the comment section below. We'll answer whatever you have. But see you guys soon. Peace.